Asian markets trade with deep cuts, with the Japanese Nikkei near the bear territory. Wall Street indices too ended with 2 to 3% cuts on Friday. US 10-year yield remains below 4% on geopolitical tensions and economic concerns. The GIFT Nifty is indicating a sharply lower start. Sharp fall seen in crude prices, with both Brent and NYMEX correcting 2 to 3% as fears of a recession in the United States offset concerns of escalating tensions in West Asia. Brent trades at $76 a barrel. State Bank of India's Q1 profit and net interest income come in marginally below estimates. Management attributes high slippages to seasonality factors, guides for 14 to 16% credit growth. And in other earnings, Standard reports numbers largely in line with estimates, while for Britannia, revenue was ahead of estimates and domestic volume growth came in at 8%. ONGC is expected to report Q1 results today. Also, watch out for numbers from Bharti Airtel and Bharti Hexacom. Good morning in the Mumbai News Center. I'm Sonal Bhutra. You're watching Power Breakfast. Well, it is looking like a day where we could see a lot of red. The global setup looks weak. We have seen the West Asian tensions. There's a lot happening with the US economy as well. So let's talk about all that. And first up, let's take a look at what the Asian markets are doing. They're largely lower. The Japanese market, they look like they're in the bear territory. Japan's Nikkei has fallen below 34,000 for the first time since January 10. Look at the Taiwanese index. It's down 7% as we speak. That's a 1,500-point cut right away on that index. Hang Seng is also lower, but the fall is not as much as we are seeing in the Taiwanese index. The Nikkei, as I said, is seeing a big cut. That index is down 5.5% right now. We have Kospi, which is seeing cuts of 4.5%. The Hang Seng, as we said, is down 0.2%. So across the board, it's a red-looking screen as far as the Asian markets are concerned. A lot happening as far as the global setup is concerned. So we could continue Friday's losses today as well. The GIFT Nifty will come up for you on the screen, and that one is indicating that the start could be deep in the red. It's a gap down opening yet again. 350-point cut on the Nifty is what the implied open is suggesting right now. So let's do one thing. Let's talk about the major action that happened in the US markets, because stocks fell sharply on Friday on the back of a weaker than expected jobs report for July. The S&P lost over 1.8%, while the tech-heavy Nasdaq tumbled 2.4%. The Dow Jones also fell over 600 points. The 10-year Treasury yield fell to its lowest level since December as the weak jobs report ignited worries that the economy could be falling under recession. Shares of Amazon declined over 8% after missing the street's revenue estimates and issuing a disappointing forecast. Intel shares had their biggest drop in 50 years on Friday after the chipmaker reported a big miss on earnings in the June quarter. The management also said they would lay off more than 15% of their employees. Job growth in the US slowed much more than expected during July, fueling fears of a broader economic slowdown. CNBC's Rick Santelli joins us with the key highlights from the report.
Non-farm payrolls comes in at 114,000. 114,000. Of course, that is the lightest level going back to minus 243,000, which was Dece of 2020 in the pandemic-affected months, of course. Now, if we look at the unemployment rate moved up to 4.3. Moved up to 4.3. That is the warmest it's been since October of 21. October of 21. And if we look at revisions, I should bring that out rather quickly. We see that last month's non-farm moved from 206,000 down to 179,000. Now, let's look at average hourly earnings month over month, up 0.2, 1/10 lighter than both rearview mirror and windshield. If we look at up 0.2, that is the lightest. It equals April. You have to go to February to find a smaller number when it was up 1/10. Let's take a macro and go year over year on average hourly earnings, also coming in light, 3.6. 3.7 was expected. 3.9 in the rearview mirror becomes 3.8. 3.6 going into the Wayback Machine. You have to go all the way back to May of 21 when it was 2.3. So big drops there. Weekly average work week for all employees comes in at 34.2. We also lost a tenth there. Week shortened a little bit. 34.2 equals where we started the year out in January. To find a smaller work week, you have to go to March of 2020 when it was 34, right on the nose.
Okay, that's the data coming in from the jobs report, but let's also listen into some important opinion coming in from the market experts on the July jobs report.
I've had a lot of client discussions post a number. I'll give you one stat that caught my eye. Throughout the entire 1990s, up until the summer of 1999, the unemployment rate was above 4.3%. So we spent 6 months below 4.3 in the entirety of the 90s. I think we have to think about a level here and understand, and Jay said this in the press conference on Wednesday, 4.1 and 4.3 as well are still really low. I actually think this number makes them pretty happy. I think this is the path to normalization that they've wanted. They're going to be happier if they get some reprieve on the inflation data in the coming weeks.
All right, that's global market action and opinion, but how will these cues impact our own markets? We have our research team joining in to tell you just that. What is the trade setup looking like, the stocks that are likely to be in the news, and the action from the F&O space as well. This is our Power Prep segment. Good morning, guys. Hormaz, let me come across to you first up. What is the market setup looking like today?
Good morning, Sonal. The market setup does not look very pretty as we speak because the GIFT Nifty is pointing to a significant gap down for our own markets. Now 350 points lower as we speak on the GIFT Nifty. So it promises to be a gap down for our own markets, and that also comes across as an extension of the global market sell-off that we are witnessing, and that does not seem to be abating anytime soon because the Dow futures are down over 350 points. The Nasdaq futures too are down 2.5%, almost 450 points as we speak. And that is also because Friday saw a very sharp sell-off in the US markets, pushing the Nasdaq into correction territory. Now it's down 10% from its peak. The S&P 500 also down 6%, Dow 4% from its peak. So the sell-off extending into the Asian markets as well. The Nikkei is down almost 6% this morning, an extension from Friday's sell-off. Now even on Friday, the Nifty saw a 300-point cut, and that after that we are seeing a 350-point downtick likely in today's session as well, snapping an 8-week gaining streak. What led the losses though? Almost every sectoral index led the losses. Auto, metals, IT, all of them contributed to the downside, barring pharma, which was the only sectoral gainer this morning. Now some key questions that need to be asked. Now it promises to be a gap down, but will the gap down get bought into? There's some important levels that analysts were mentioning around 24,500, but now it promises to be a start below that level. So we'll see if that gets bought into. Now will this impact the overvalued stocks, the low float stocks, particularly in the PSU space? Will that have an impact? And lastly, how will this impact the market sentiment within the IPO markets? Remember, Ola Electric's IPO is open for subscription. Earnings reactions will continue and earnings season itself continues, but the focus today will be on the markets, and the key levels to watch. The GIFT Nifty is promising a gap down start.
Okay, all right. So that is the market setup, but of course a lot of individual stocks which will be on our radar today. Sudarshan is joining us with that list. Good morning, Sudarshan.
Morning. So we'll start with SBI. Headline numbers were slightly below estimates. Slippages have risen due to seasonality factor. NI was up 6%. NIM has fallen 6 bips sequentially and 11 bips year-on-year. Britannia, it was a mixed Q1. Revenue and volume were in line while margin was below estimates. Company says it's well positioned to benefit from consumption growth in rural area. For Titan, it was in line to muted expectations. Margin has come in at 10% versus poll of 9.7%. For jewelry segment, EBIT margin was 20 bips higher at 11.2%. And going forward, festive and wedding season will be key triggers for the company. For Divi's, earnings were a miss, but commentary was positive. Revenue has missed estimates by 3% and margin by 70 bips. But companies positive on opportunity in phase 2 and phase 3 molecules and GLP-1 drug opportunities. LIC Housing, NI's missed estimates by 10% and was down 10% year-on-year. But asset quality was steady. Gross NPA is coming at 3.21% versus 3.3% sequentially. For other companies, some companies which have reported good earnings for Bank of India, Delivery, MedPlus, Amara Raja, Sarda Energy, Appwell, Narayana Hruday and Eveready. And companies which have reported bad or weak earnings were JK Tires and Sri Renuka Sugars. In the news flow, Gland Pharma USFDA issues 3 observations for Hyderabad facility, but company says it was procedural in nature. For M&M Fin, company has reported July update. Disbursement was up 3%. Collection efficiency has come at 95% versus 96% in the same month last year. And last is PC Jeweler. IDFC First Bank has approved one-time settlement proposal of the company.
Okay, all right. That's a long list. Thank you so much for joining us, Sudarshan, with that. Finally, let's talk about all the cues from the F&O space. Manglam is joining in now. Good morning, Manglam.
Good morning. We're bracing ourselves for a manic Monday. Why do I say that? Well, because the Gift Nifty is down almost 350 points. We're talking about the Wall Street sell-off that we saw with the Nasdaq entering correction territory. More importantly, the Asian markets are seeing a sharp sell-off as well. How much of that was anticipated already? Well, not to that extent, but remember on Friday, we did see some sell-off on the Nifty as well, down almost 300 points. We had the mid-cap index underperforming for 2 trading sessions, despite the Nifty hitting that 25,000 mark on Thursday itself. The street has begun to factor in some more volatility. On Friday, if you look at the India VIX, that's up around 11.5%, closer to 14 mark. And we also saw the FII sell in cash market and index futures. So 3,300 crore worth selling out there in the cash market, notwithstanding the DII buying of 3,000. The FII sold close to 1,400 crores in index futures as well, with the Nifty futures premium now turning into a discount of 6 points itself. What did they do in index futures? They did not unwind as much longs as they added short. So they added around 20,000 short contracts. And with that, their long exposure has now dropped to 64%. Remember, at the start of the series, it was closer to 66%, with net longs being close to 1.9 lakh contracts. So a lot of the long unwinding, short addition has happened ahead of this anticipated sale. Let's see where it goes from here. The important levels to watch out for. 24,700 put writers were pretty active for a premium of 165 rupees, telling you that the first port of call for Nifty would be closer to 24,500 to 24,550. With the Gift Nifty indicating that sort of cut, do we see lower levels? Well, a lot of people did do some punt buying at that 24,100 put and the 24,000 put itself for a premium of 13 to 18 odd rupees. So the Nifty opens below the 20-day moving average. Let's see whether it goes all the way down to the 50-day moving average. The important level to watch would be the budget day low of 24,074. 2 stocks that I'm watching out for in particular, SBI post its muted results, and HDFC Bank, which has been resilient, and we have the trigger of MSCI flows coming in for the next couple of weeks. So let's see whether that sustains the fall on the Nifty Bank, which was a relative outperformer on Friday. AB Capital as well as Chambal Fertilizers have entered F&O Bank. So those are a couple of stocks I'll be watching out for too.
Okay, all right. Thank you so much, Magnam, for that. And thank you guys for joining us and prepping us up for this crucial trading day ahead. Let's slip into a break. Up next, SBI reports its first quarter numbers. We'll get you the fine print on the other side. Stay tuned for that. Welcome back. You're still tuned into Power Breakfast. It's time to talk about some key earnings. SBI reported its first quarter numbers over the weekend. Ritu is joining us to give us the fine print and the analysis of the numbers. Good morning, Ritu.
Good morning, Sonal. SBI's first quarter numbers were a tad below the CNBC TV 18 poll. Profit growth was flattish at 0.9% over the previous year, and this is because of an erosion in margins. There was a dip in other income as well, and a sharp rise in the loan loss provisions, while the core income of the bank, net interest income, that grew by 5.7% over the previous year. Sequentially, there was a decline in both. Now, margins saw a dip of about 8 basis points on a sequential basis to 3.22% as the yield on advances dropped, while the cost of deposits was more or less flat, but the drop in NIMs was offset to some extent by the rise in investment yields. If you look at the asset quality, though, while the ratios, gross NPA and net NPA, they were stable or even improved, the gross slippages were sharply higher at 8,707 crores versus about 3,900 crores in the previous quarter. But the management attributed most of this to seasonal and one-off factors which should rectify in the coming quarters. The advances growth was good at more than 15% over the previous year. Sequentially, it was muted, no surprises there. But deposit growth at just a little over 8%, year on year, that was sharply below the system level growth, which is at 11% plus. In terms of guidance, the management expects to see credit growth of about 14 to 16% for the year, defend margins at the current levels while retaining the cost of credit at around 0.5% for the full year. Take a look at what the chairman Dinesh Khara said on all of this.
I hope that we should be in a position because whatever increase in deposit rates have also happened, even our MCLRs have also gone up of late, and we will be in a position to have the better yield on advances. Our yield on advances have already moved to about 8.86%, and we should be in a position to improve our yield on advances going forward. So that is something which will help us in ensuring that our NIM, we should be in a position to protect around these levels. We are having a pipeline is about 4.76 trillion, and it is equally split between proposals in pipeline and also proposals which have been sanctioned but awaiting disbursement. So I expect that, of course, when it comes to these corporate proposals, the disbursement takes some time. It does not happen immediately. But yes, of course, a significant portion of that, at least part of it, will be availed. This is what we expect. So I think I expect that we should be in a position to maintain our earlier guidance of about 14 to 16% kind of a growth, and more towards 15% kind of a growth. As I mentioned, that these are all temporary aberrations. That is something which has caused these slippages, and I don't expect that it will have any permanent impact on the book. And all the subcomponents of the book are faring well, and we have actually seen that SMA 1 and 2, as compared to previous year, have also come down from over 9,300 in the first quarter in the previous year. It is now somewhere around 7,900 odd crore. So that is something which we have seen. So I think it's a very clear reflection that when SMA 1 and SMA 2 are much lower, that asset quality is not a challenge. And also, if at all you will look at the slippage ratio, it is actually 10 basis points down as compared to the first quarter of the previous year.
Okay, all right. With that, we'll step into a break. Up next, we get you all the cues from the commodities market. Stay tuned for that. Welcome back. You're still tuned into Power Breakfast, where we spoke about global markets, individual names as well. It's time to talk about commodities. A lot of action there. Manisha Gupta is joining us now. Good morning, Manisha.
Morning, Sonal, and thank you so much for that. Well, yes, I'll start with the crude oil prices because the deepest and the sharpest of cuts really have come in for this one. The crude oil prices not only have posted 4 weeks of constant gains, but the previous week has seen the prices go to multi-month lows. For the WTI crude prices, now we are trading at an 8-week lows, but for the Brent prices, the decline has been much sharper. That one is trading at a 29-week lows right now. When you look at the crude products, heating oil prices are trading at an 8-week lows as well. It is about weak U.S. manufacturing data. The Chinese and the Europe numbers also have come in on the weaker side, and the U.S. jobs data on Friday was much lower than the expectation and much lower versus the month of June as well. Now, going forward, it also is going to be about the U.S. rate cut possibility. As of now, 25 basis points totally has been factored in, and the markets are anticipating a higher rate cut as well. Not just crude oil prices, if you look at metals, those also went in for a very sharp decline in the previous week and today as well, with the U.S. earnings coming in on the weaker side, the U.S. dollar index trading at a 20-week lows as well. You have seen further pressure come in for this sector also. So the copper prices are trading at a 4-month lows. It's a very sharp decline that I can see across in silver, zinc, aluminum, all of these metals also trading between 1 to 2% on the weaker side in Asia.
Okay, so lower levels in commodity markets, lower levels in equity markets. Thank you so much, Manisha, for joining us as always. That's the action from the commodity space. Let's move on now because it was an eventful Olympic weekend which passed by with India's men's hockey team qualifying to the semi-finals of hockey, knocking out Great Britain in a 4-2 victory. Veteran goalkeeper Srijesh made crucial saves to cement India's triumph, while sensational shuttler Lakshya Sen suffered a heavy defeat to world number 2 Victor Axelsen in the men's singles semi-finals. Hopes of another bronze is still up when he will face Malaysia in the playoff today. In another extraordinary win, Novak Djokovic bags his maiden gold medal against Spain's Carlos Alcaraz. This makes top horse Djokovic the 5th player to win all 4 singles Grand Slams and the Olympic gold. Okay, there's still a lot to track when it comes to the Olympic Games, but for now, we'll take your leave on Power Breakfast today. Bazaar Morning Call comes up next with all the market action. Stay tuned for that.